All right, so good morning, good afternoon, and good evening, guys. All right, so in today's video, will be it's just a continuation of market structure. Continuation of the videos you have above. So in this video, we'll just still talk more about basic and advanced market structure. I love taking my own step by step, start from the basics and move to the advanced. So without wasting much of our time, we'll start from the basic. So this is the basic market structure that appears to be as simple as ABC. This is it. So yeah, yeah. Alright, so here is the basic market structure. As you guys all know, now let me use my brush. So you guys all know that this low here puts in this high, while this low took out the high. Now this low again came and put in another high, while this low took out that high that this one puts in. Same thing here. This man here puts in this high while this man took it out, right? Now this one here puts in this high while this man took out the high. In that case, as it's taking it out, it's giving us what we call break structure. BOS. This break of structure signifies continuous movements to the same direction, meaning we are bullish. You get, so all this now, all these BOS you're seeing here signifies continuous movements to the upside. You get, so let me break it down again so it's going to be easy and more self-explanatory. So here, like I said, this low here, all right, this low here took out this high. In that case, it formed a break of market structure for us, meaning we should what? Look for buy opportunities. We should expect more push the upside. Whenever price does something like this, there will always be a beautiful order block around here, around somewhere like this. There will always be a beautiful order block around here. It gets either an order block or a fair value gap or a demand zone around here for you to buy. That is why price will always come back after a break of structure. We'll go to the live charts and understand it. After a break of structure, market will always, come back and test the zone before, before going to the upside. All right. So in that case, like I said, this low here took out this high. In that case, gave us a break of structure, which is what I call my BOS. All right. So this other low here took out this other high and gave us another BOS here. All right, break of structure. Break of structure means that the market is likely going to continue moving in the same direction. Get, so here is another BOS here. Sorry, this low here took out this high and gave us another break of structure here. All right, while this low here took out this high and gave us another, took out this high and gave us another break of structure here. In that case, and this is a higher high. This higher high came and took out this low that took out the previous high. In that case, the market is no more bullish. This is where we have what we call a change of character, meaning the market is no more bullish, it's now bearish. And after a change of character, there will always be a very beautiful order block around here, or a fair value gap around there. The price will likely come back, kiss, and what, dump. That is the logic about the markets. Now, price is forming a change of character for us. We are now looking for sales. It came and triggered the other block that is kept around here, and what, started going down. So it's going down. We now have a break of structure here, BOS. You get this high now, took out this low and gave us a BOS. This high here took out this low and gave us a BOS. Alright, this high here took out this low and gave us BOS. This high here took out this low and gave us a BOS. Now if this low now come and take out this so-called high, that took out the final low, it gives us another change of character, and we expect this and this. See how simple it looks? That's why we call it basic market structure. Now let's move into something that is more advanced. Let's move into something that is more advanced. Now let's say, assuming we have something like this. Yeah, let me come down a bit. This, 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 and this. You can climb to the other. And uh, this, alright, this, 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 and this. Alright, so looking at all this now, believe me, we are still bullish. What you should focus on is your external swing points. You get, I talked about this in the previous video I uploaded the other day about internal and external swing points. Alright, I talked about internal and external swing points. We'll go to a live chart after this particular example. This is an example of an internal swing point. External, I mean, these zones here are your trading range. Everything that happened inside here are what we call external swing points. These are the traps that the market makers set for you to fall in, because you come and start marking, okay, since you have this high, that means a BOS, this a BOS, this a BOS, and you start looking for sales. You come and start looking for sales around here, and then you see market was come down or boom, took out your stop loss. You come and start saying, that market makers, market people, they did this, they did that. No, they did not do anything. You don't just know how to read the market structure. You don't just know how to understand the trend. You don't just know how to understand the directional bias of where the market is coming from and where the market is likely heading to. Once you get to understand the market structure, where the market is coming from and where it's likely going to, you will understand whatever the internal and external swing point is all about. All these men inside here are your internal swing points, and these men here are your external swing points. Guess, let me make the charts to be clean so that I'll give you the final breakdown before we move to the live chart. So before we move to the live chart, this is the lowest point we have here, right? This lowest point happens to be the protected low. Obviously, there will be a beautiful order block around here. That is why I call this advanced market structure. There should always be a very beautiful order block around here that the market will likely come, take out, and what, boom, to the upside. It gets to the upside. So this is now the highest point. As market is taking out this zone, this is where we get the real BOS, showing what, continuous buy to the same direction. You get, and this man now happens to be the protected low. So when this price forms the BOS, the rank of the protected low has been taken from this man here to this man, because you will be asked where is the lowest point before the market took out the last break of structure. This is the